Hi, this is Vijay Bambwani and I'm recording this video which is a pretty critical update to what I have been talking about in the past, especially all through 2019. My veteran subscribers and viewers of my video will recollect that I have put forth a hypothesis, an established hypothesis, of course, as to how the US presidential election cycle impacts our investments. All other factors remaining constant, it is supposed to be an extremely bullish time for US equities, as they are right now. But I have also said that crude oil prices tend to go down because the US administration is endeavoring to sort of bring inflation under control. The United States dollar, the USD, tends to go up in the run-up to the election, and that has its own unique pull-push impact on the markets and asset classes all over the world. Is there a possibility that this year the US presidential election cycle may not exactly adhere to the standard operating procedure that we have seen so far all these years? My answer is possibly yes. Let me take you back in time and tell you about a behavioral aspect of the market. There is a phenomena in behavioral finance called the butterfly effect, which states that sometimes an event as small as the flappings of the wings of a butterfly can cause a storm in the markets. The event might be small, but it triggers a chain reaction of events, and therefore it's called the butterfly effect. Take, for example, the French army sniper who was positioned in Afghanistan at the Tora Bora mountains. He sighted Osama bin Laden in his sniper rifle, but before he could get a clear go-ahead from his commanding officer to shoot Osama down, Osama had gone back in the cave. There was a huge time lag between him trying to contact his commanding officer and the commanding officer giving a clear go-ahead. Had it happened, the possibility is that 9/11 would have never happened and the course of financial history would have been significantly different. In the US also, there has been a butterfly effect recently. I'm talking about "I can't breathe," those words which were uttered by George Floyd. Now, Black Lives Matter, which is the movement, what the Americans are now calling it as, has the potential to upset the apple cart for the incumbent President Donald Trump. What I am witnessing of late is that the US dollar and the US dollar index, which is the US dollar benchmarked against the global basket of all major and minor currencies put together. Since the last couple of days, I'm noticing that the US dollar index, the Dixie, is now weakening against the other currencies. What does it basically mean for you and me? Can we make money out of it? Can we use this information to our advantage? Yes. Now, I talked about gold and silver being bullish, but especially so after the US elections, which happened to be on 3rd November 2020. The reason was that till the run-up to the election, the US administration, aided by the US Federal Reserve, would try and boost the US dollar so as to control inflation as well as control its debts. But now that the dollar is going down due to mass-scale unrest in the streets of many cities in America, gold and silver prices might just start rising a little earlier than before the beginning of the election process itself. So my guess is we can bet that gold and silver need not wait till December 2020 or January 2021 before they start to gain traction on the upside. To that extent, maybe it would make sense for you and me to increase a little bit of our allocation to bullion. Now, you may choose to exercise your choice where gold is concerned. You could pick it up in physical form. You can buy ETFs, right? But in silver, you really have no choice. Silver ETFs are not available in India. So where silver is concerned, it's only in the bullion form, the physical form. How much should you raise allocation by? Maybe 5% for now. I would raise, when I say 5%, I mean 5% for bullion. Of the allocation or allotment for bullion, I would keep 60% for gold and 40% for silver. You can tweak it a little bit here and there as per your risk appetite. You're free to kind of balance out between gold and silver. The reason why I'm saying you should hedge your bets is because gold tends to be a lot more stable between the two, whereas silver moves in snatches. But when it moves, oh boy, it really moves. So you'll have to be patient with silver, but the waiting, to my knowledge and my experience, says the waiting will be worth the effort. So even though the US presidential election cycle need not work like clockwork like it has in the past every 4 years, there's still a way out. Do not lose hope, because financial markets give a very savvy and a balanced investor with a 360-degree worldview to basically shuffle his pieces on the chessboard of the market. You can basically take money out of one asset class and shuffle it across to the other asset class, so that your overall returns on your portfolio need not really suffer. On that cheerful note, I'll wish you goodbye from this video till we meet again in my next. Please do not forget to click like on this video if you're watching it on YouTube. In the comment section, do let me know what you think about this video and what else you would want me to record in my future videos. Also, do not forget to share this video with your family and friends and help me spread the cult of knowledge-based investments. Let me also remind you that Equity Master is on Telegram, with their handle being Equity Master Official. Please do join the Telegram channel, wherein I put in a couple of updates every day, Monday to Friday, and I would love it if you could read those updates. Do take very good care of yourself, your family, your investments and trade. Vijay Bambani signing off for now. Thank you for watching. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.